Welcome, everyone. Welcome to this episode of Market Wrap. And what a week this was. I think history may, if somebody looks at this week, they'll see a flat week, but those who have lived through it will truly understand what happened in the wicks of this week's scandals. So, lots to unwrap in this episode. Let's start with the big news, of course, tariffs from US. What is happening and how has Nifty reacted this way?
Oh yes, I think we've seen good amount of volatility, and despite the initial gap down opening, what we have seen is that Nifty sort of witnessing one of the biggest relief rallies, largely tracking the 90-day pause on tariff declared by Mr. Trump. And in that process, Nifty has recovered 5% from the lows and settled somewhere about 2,840. Sectorally, since there was a lot of volatility, so FMCG did well. But in the last day, what we've seen is that sectors which have been sort of taken a good amount of beating, especially the likes of Pharma and others, they did very well. I think good part is that while this volatility is here to stay, because China and US are still in a sort of a tariff war, but things become a lot more calmer beyond these two countries. And I think for us, we are quite better placed because we are already talking to them, and it is possible that our 3 month is a decent enough window to sort of close a trade deal. And which is why we feel that markets have respected the 21,900 kind of a levels on the lower side on multiple occasions on a closing basis. And which is why I feel that the bottom is in place for the markets. And markets are headed towards higher to 24,000 kind of a levels. Obviously, this will not be a single straight line kind of a move. You will see volatility in between. On top of it, you have result season has already started, so you'll see stock specific reactions as well. So, but good part is that whenever we have seen a decline of say 17, 18 odd percent, 17% in this case in Nifty, and a time correction of somewhere about 7 to 8 odd months. We are already in 7 months. Usually, the next 12 months are quite rewarding. So, what we have seen is that, except for 2004 and 2006, markets have, in general, given 23% kind of a return. So, next 12 months are looking a lot better. And I think a big sector like banking is getting everything right. This is one sector which is sort of doing very well with RBI policy also sort of helping. So from that perspective, we are well poised to sort of do well going forward, barring some volatility. All set stage for 24,000 levels of the cards for Nifty.
Right. Other than this, I think quite a few factors are in play, quite a few variables and are now going to play out. I think let's start with monsoon. What does it look like?
So weather god has been very kind to us. I think this time also SkyMet, which is a private agency, has forecasted monsoon to be normal at 103% of the long period average. And what they're saying is that initially, say for example, in the first half of the season, you might see a moderate kind of a rainfall, and in the second half, which is July, August, and September, mind you, July is one of the single most important month, is expected to witness a lot more healthier rainfall. And this is definitely a good news from RBI perspective because we need to keep our inflation under control. Besides that, it is definitely positive for a big sector like auto. FMCG is also another sector that should benefit. And besides that, consumer durable is another segment which should benefit. So from that perspective, if I have to sort of single out a particular stock, probably M&M looks a lot more better place. I think Q4 tractor growth is expected to be in double digits, and if monsoon is cold, probably FY26 also could shape up very well for a company like M&M, especially their tractor division.
Right. How have investors been behaving amidst this volatility, sir?
Oh, yes. So if I look at the recent inflows or mutual fund inflows, I think, see, we need to look at it from two, three perspectives. One is we need to sort of exclude NFOs because NFOs come and go depending on how the market conditions are there. Similarly, in the last 1.5 or 2 years, we have seen a lot of thematic funds being launched. So I think true behavior of retail needs to be washed out, excluding this also. because you need to sort of focus on more on core categories or core behavior of the investors. And from that perspective, I think despite the kind of volatility what we have seen, especially in the month of Feb and March, I think the inflows have been quite robust. So I'll start breaking numbers one by one. So for example, inflows, including if you sort of look at NFOs, it's 25,000 compared to 29,000. So it looks like a decline. But if I strip out the NFOs, like I said, it's not a core category. So the number becomes a 25,000 kind of inflows versus 27,000. So 29 becomes 27. And if I sort of exclude the thematic funds, like I said, then the inflows are on a higher side at about 24,000 compared to 23,500. And let's even if you sort of understand that February has got lesser number of days, even then the inflows are more or less sort of stable. So I think my interpretation is that investors are behaving a lot more maturely, and depending even considering the amount of volatility what we have seen in the last few months. And if I look at the category-wise inflow in a segment like say small cap has actually gone up from 3,400 to 4,100. For flexi cap, again from 51 to 5,600. Multi-cap, again, it has gone up from 27 to 2,750 crores from 2,100. Now, inflows largely, if you look at something like, say, large and mid-cap is largely flat at 2,700 crores, mid-cap again flat, focus fund again flat, large cap, minor decline, so from 2,900 to 2,300 kind of levels. And last but not the least, if I look at the SIP numbers, so SIP numbers in December was 26,500. I think somewhere down the line, this number has been there at 26,400 in Feb. Sorry, in January and about 26,000 in Feb, and now we have got is again 26,000 kind of a number. So I think you are hardly seeing any volatility in the SIP number. So it's 400 to 500 kind of a delta is what we're seeing. So given the volatility, I think at least on the retail side, they're a lot more confident of the Indian economy, and I think I'll not be surprised if the market shows a lot more resilience going forward as well.
Right. I think RBI also came out with a 25 bips of rate cut, and their stance has also been changed to accommodative. What will be the impact of this news?
So, Vishu, the rate cut of 25 bips to 6% on repo was unexpected lines. In fact, my sense was that probably RBI could have taken a leap of faith and probably looked at 50 bips kind of a cut. But I think the good part is that they have changed the stance to accommodative. In very simple English, what this means is that your next policy, either it is going to be status quo or you will see a rate cut. And I think the governor was a lot more dovish in the interview post policy. So I think the one key takeaway is that while there is a change in stance, I think the RBI is quite sort of pro growth with this policy. What they have done is that they have recognized the uncertainty because of the tariff, and which is why the GDP growth rate for FY26 has been revised downward from 6.7 to 6.5. Whereas when you look at the street expectation, it's somewhere about 6 to 6.3. So RBI is quite sort of positive compared to the street expectation. And I think that is what is also sort of getting reflected in their overall policy stance. And on the inflation side, also, they're expecting inflation to dip from 4.2 to 4%. Mind you, we already spoke about monsoon being good. On the liquidity front, I think RBI is clear that they are going to maintain liquidity at 1% of NDTL. So currently, the surplus in the system is somewhere about 1.6 lakh crore, and they would want to maintain it at around about 2 lakh odd crores. And our sense is that we've seen minor decline in the yield, but in the last, say, 1 month, we've seen 10-year yields declining by 25 bips. Our sense is that at least going forward, a 50 bips kind of a rate cut is very much on the cards from here on, if not more. A lot will depend on how US inflation also moves. But I think RBI's stance is quite pro-growth and quite dovish in nature.
Right. How about its impact on the banking sector?
Yes, so banking, like I said, is one of the top performing sector. I think this is the only sector on a YTD basis has seen a decline of only 1% odd, largely because of the a lot of aggressive measures taken by RBI, and RBI policy is also going to help. Now, initially, for banks, it is slightly negative because your 60% of the loans are linked to benchmark rates, so yields are expected to sort of align with the rate trend. But overall sense is that when you look at the deposit rates, especially banks like HDFC and some of the PSU banks have started to sort of cut deposit rates. So while there is going to be a margin pressure of 5 to 15 odd bips, but in general, it is very positive for banks in general, and NBFCs are at the forefront in terms of the overall benefit. A good part is that overall this year the credit growth is expected to be 11%, and going forward, our sense is that this is going to be better at closer to 12 to 13 odd percent. So from that perspective, banking is one sector which is really shaping up well, and all the things are sort of settling in for this sector to sort of do very well.
Right. So TCS also came up with its results. How do we read it?
Oh, yes. IT, if you look at in this entire tariff backdrop, was the worst performing sector. On a YTD basis, this sector dropped somewhere about 23, 24 odd percent, and largely because of the recession fears in the US. Now, TCS results from that perspective is quite good. While when we look at the numbers, absolute numbers, the revenue has sort of declined by 0.8 odd percent. Then EBIT margins have also declined by 30 bips. PAT has sort of declined by 1.6 odd percent. So from that perspective, number on an absolute number basis, things look muted. But when you look at the commentary, so for example, what TCS is saying that historically, whenever US has seen a recession, they've always gained market share. So that is one of the big positives. The other is that for the second straight consecutive quarter, their TCVs have been pretty good at 12.2 odd percent, which means that while they would have grown at about 4% in constant currency terms in FY25, their growth is expected to be better in FY26. And I think in case if a lot of negative pans out, they may not witness margin expansion because their margin aspiration is 26 to 28 odd percent, whereas in this quarter, their EBIT margin was somewhere about 24 odd percent. And I think overall for TCS or from the commentary what we picked up, I think while the management is highlighting some of the slower decision-making cycles, but they are quite positive from a long-term tech spending perspective. So from that perspective, while there are uncertainties, but they're relatively a lot more confident in terms of doing better in terms of numbers going forward. And since TCS itself has corrected about 30 odd percent and is available at 21 times FY27, so which is, I feel that given the positive commentary, TCS becomes a buy at lower levels with a target price of 37.50.
Right. Sir, what about the other IT companies? What are our expectations from this quarter?
If you sort of look at most of the tier one names, say for example, Infosys, we expect a revenue decline of about 2% quarter on quarter. Margins again would witness a decline of 60 pips to nearly 20.7 odd percent. HCL Tech, 1% quarter on quarter decline. EBIT margins are going to decline by 140 odd bips. LTI might report flat revenues and flattish margins. Where we are sort of more hopeful of better growth is again Persistent and Coforge. So in both the companies, we are expecting. So for example, in Persistent, we are expecting 3.5% quarter on quarter growth in revenues, plus 100 bips expansion in margins. Coforge also 3% kind of a growth and 60 bips kind of an increase in margins. So tier two companies are expected to do better growth in terms of growth as well as in terms of margins. And while they are valued higher, and we've seen a decent amount of correction, but in case if they are able to sort of walk the talk, then I think these companies have a better room to sort of play the upside. But in general, I think commentary is expected to be a lot more important. Usually, TCS management is slightly more bullish on the overall perspective. We have to watch for Infosys. So Infosys talks about the worst case scenario and all of it. So I think commentary becomes a lot more important from IT perspective.
Right. Let's get back to the tariff bit once again for a while, sir. I think while some tariff break has been given in terms of a pause, but auto and metals are still somewhat under the weather. Could you help us understand what is exactly happening there?
So yes, so if I sort of break both the sectors, so for example, in auto, so OEMs hardly any export. It is the Tata Motors which has got exposure. Good part is that for Tata Motors, UK, where bulk of their capacity lies, so there it is going to attract a softer 10% reciprocal tariff. Relatively, the OEMs are not impacted so much. And you will have some of the ancillaries which will have some exposure. So that is where the probably impact could be. But our sense is that largely this sector also would witness some relaxation going forward. So auto in general not impacted so much. Similarly, metals as a space, if I look at now, the in metal, the biggest challenge is the kind of dumping what we can expect from China. But largely, we are seeing positive things on the ground. So, for example, what has happened is that post this levy of 12% safeguard duty, we have seen metal prices jumping 10 odd percent. So HRC prices have moved from say 47,000 to 52,000. And our exposure is about 2% in terms of steel exports, about 10% in terms of aluminum. So volume wise, we are not sending much. And this safeguard duty on China is working because what we have seen is that in the month of March, the imports have declined to about 3 lakh tons. That used to be about 4 lakh ton in the month of Jan and Feb. Uh, so I think this sector has started to witness a positive traction, especially on the pricing side. So metal, I think unless something dramatic happens, I think this sector you are going to see a lot more better numbers. Q4 is expected to be better than Q3, and I think Q1 is going to be a lot more better than Q4 as well. So metals overall, we are bullish.
Right. Tata Steel was also in news this week for a variety of reasons. How do we look at that?
Oh, yes. So I think Tata Steel domestically has been doing good, but operation-wise, they've been sort of struggling in UK and Netherlands. So Netherlands is a big operation, so they have got a capacity of about 7 million tons. Now they are restructuring their capacity. So as a part of restructuring, they are sort of laying or reducing their workforce by 18 odd percent. And what they are sensing is that this is going to sort of generate a saving of about 500 million euros, and there is a potential further saving of 50 to 60 million euros. Now, earlier this used to be a very efficient plant where the average spread was somewhere about $240 per ton, which has now sort of come down to about 170. So our sense is that this is extremely positive for a company like Tata Steel. And like I said, the overall for metal, unless besides dumping fear, most of the other issues are largely sort of being taken care of. And our fair value for Tata Steel is about 150 odd rupees. So again, it is offering double-digit upside from current levels.
Right. I think Sun Pharma also got some good news coming in from US.
So I think on the tariff front, pharma is one of the biggest gainers given the threat which Trump had sort of given in. And a lot of these big pharma names, so for example, Sun Pharma, the revenue is somewhere about 33% of their revenues is coming from US. Now, for this company, this particular news of Selvi, or they should be able to launch that drug, is a big positive because they acquired this drug for about $576 million, and in the next 3 4 years, they're expected to rake in revenues of about $300 million. So their payback is going to be a lot more less from a time period perspective. And good part is that Sun Pharma is walking the talk. So out of their of their overall sales, 20% is coming from a specialized portfolio, and which is a high margin business. And in fact, this is one segment which has grown at 23% CAGR. So I think all in all, things are turning positive for pharma, and we have a target price of 2185 on Sun Pharma. So in general, for pharma, it's a lot more positive development.
Right. Right, sir. Can we also discuss realty sector and some highlights from it?
So Real estate, I think what we need to actually watch out for, Vishu, is the kind of a pre-sales guidance they give for FY26. But for FY25, if I have to discuss, Macrotech has actually surpassed the pre-sales guidance of, say, 21,000. So they have done about 23,700. So this company has already done well. Same is the case with Godrej Properties. So they had their pre-sales have grown closer to about 29,400 odd crores, and they've already surpassed the guidance of 27,000 odd crores. Keystone Realtors have also grown their pre-sales by about 34 odd percent. Their guidance was 3,000 odd crores, so they have already surpassed. So most of the players have done very well from this pre-sales guidance, except for some of the players like Shobha, which has witnessed a decline of 5.5%, largely because of the state-specific issue and some technology issues with the state government. So from that perspective, most of the real estate companies have done well. And this is another sector which has taken good amount of impact. So IT doing relatively better going forward, and also the perspective of rate cuts. Plus, in case if we get a good pre-sales guidance for FY26, I think that might turn around the sector. But overall, things are turning positive for even a sector like real estate.
Absolutely. Well, that was it for this week. Thank you so much for your insights, Pankaj sir. And of course, for our viewers, if you have any questions, please put them down in the comments and we'll try to get back to you. Thank you for watching.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.